Good afternoon. You're watching Business World Live. I'm Jess De Los Santos. We kick off our broadcast with the Labor Department admitting that the country's employment rate still has a lot of room for improvement despite the decline in the number of jobless Filipinos in October. Now, data from the Philippine Statistics Authority show that country's jobless rate dropped to 7.4% or 3.5 million in October. That's from the 8.9% or 4.25 million unemployed Filipinos recorded in September. This is also lower than the 8.7% logged in October last year. Now, Labor Assistant Secretary Dominic Tutay notes that the unemployment rate has shown a huge improvement as the economy reopened further. Now, despite this improvement, she admits that there's still a lot of things to work on for the country's unemployment rate to drop to its pre-pandemic level of 5.1% or 2.4 million Filipinos. Okay, that a bit of news somehow boosted the performance of the main index here. You have the PSEI poised to end the day in the red, but then shares tempered those losses to end the session with muted gains up close to a quarter of 8% to 7,147. That extends the benchmark's gains to 4 days here. This again as employment numbers improved. Inflation earlier in the day as well cooled, easing to 4.2% from 4.6% in October year on year, though still higher than the 3.3% recorded in November last year. Now, earlier in the program, we had Mike Ricafort. He is the chief economist over at RCBC. He mentioned that we might be seeing an easing of year-on-year inflation as well by the month of December, especially with a sharp correction in global oil prices. Now, talking about oil and energy here, one power firm here heavily sold off today. I'm talking about AC Energy, which plunged as much as 9.4%, but tempered those losses, ending the day still down 4.6%. This as the Ayala unit gave the go signal for the sale of 2.69 billion shares to Aran Investments. That's for a total of 9.33 billion pesos. Shares heavily discounted at a price of 3 pesos and 47 centavos a piece. That compares to Monday's close of 11 pesos a share. Now, Carlos Temporal of AP Security says this is causing a market overhang. AC Energy is the benchmark's biggest loser at 10 pesos and 50 centavos a piece. But still, despite the gains today, you have decliners beating advancers here. As you can see, again, AC Energy is the worst performer. Robinson's Land not far behind, down 3.3%. A number of stocks shedding more than 2%. There's Converge, Bloomberry, and Aboitiz Power. However, on the upside, you have the likes of Globe ending the day in the green here, still up 4.6%. SM Investments and Jollibee increasing more than 2%. JG Summit also adding 1.2%. Meanwhile, the newest entrant to the local bourse just had a red day so bad it sank 30% from its IPO price. Medical goods distributor Mediline went into a tailspin on day one of trading. That's over Omicron worries and expensive valuation. Of Manny Cruz of Papa Securities says punters unloaded the stock upon seeing that they won't be getting a quick return from Mediline. This as Omicron creates market uncertainty. The plunge here breaks the streak of 6 IPOs which managed to climb from their IPO price during their first day of trading. Mediline IPO price was at 2 pesos and 30 centavos a piece. It ended Tuesday. Look at this at 1 peso and 61 centavos a share. Now, here are other headlines we're keeping our eyes on. The World Bank says the pandemic has dragged the country's long-term potential economic growth from over 6% down to 5.7%. World Bank economist Kevin Chua says the economic scarring was mainly caused by the closure of at least 10% of businesses in the country. This on top of disruptions in health and education that could hurt future earnings. However, Chua notes that the outlook is, quote, not cast in stone. He says pursuing digitalization and creating more jobs can boost the country's GDP potential and strengthen recovery. Now, Fitch Ratings expects the Philippine banking industry to recover moderately next year. This is on the back of improving loan growth and declining bad debts. Lending shrunk from December to July as banks and borrowers shied away from giving and taking credit. Though bank lending increased for the third straight month by 3.5% in October, it is mainly fueled by borrowings for productive activities while consumer loans continue to drop. Fitch says credit growth could reach 8% next year, supported by a low base and economic recovery. Fitch also notes that excess liquidity could help fuel loan growth next year. Fitch adds that the FIST Act, which was signed into law earlier this year, could also help ease banks' bad loans and assets. While the economy appears to be on the mend, the looming threat of the Omicron variant still poses some risks. How can Filipinos better equip themselves financially should there be another economic downturn? Let's get thoughts from Manulife Investment Management Philippines CEO Ira Gaspar. Good afternoon, Ira. Thank you for joining us here on Business World Live.
Good afternoon, Jess, and thanks for having me here.
Okay, so first thing, how has the pandemic changed the Filipinos' mindset when it comes to making financial investments?
Based on the results of the latest study of Manulife, many young Filipinos covered in our survey, Gen Zs and millennials, are actually starting to take the necessary steps to secure financially their future. So, in terms of their top concerns like running out of money or being in debt, this actually fueled their top priorities, which include saving money and becoming financially independent. So the pandemic has somehow accelerated the financial adulting of the young Filipinos included in our survey, causing shifts in their behavior that put saving, investing, and necessities in their top priorities.
But what about, especially when we're talking about investments here, one of the major concerns also would be taking up offshore funds. Has there been a huge increase when it comes to that?
Correct, correct. So actually, there is no single asset class that outperforms across market cycles. And the pandemic has affirmed this view and highlighted the importance of diversifying investments geographically because the local bond market and equity market can move in the same direction. So that's the one of the important benefits of offshore investments is that it allows investors to access investment themes that are not available locally and also themes that benefit from structural trends that's amplified by the pandemic like healthcare and technology. So the good thing is today Filipinos can actually easily access offshore funds at very affordable minimum investment size. So for example, in the case of Manulife Investment Management, many of our UITFs that invest offshore can be accessed by Filipinos at a ticket size of just 100 US dollars or 5,000 pesos.
Now, earlier also you mentioned about how Gen Zs and millennials are more adventurous, or should we say risk takers when it comes to taking up financial instruments or financial investments here. Question now is, which types were taken up the most, at least when since the pandemic started? Which has been the most appealing for them?
Based on the results of our study, over 60% of the young Filipinos that were included in the survey actually own an insurance product, and at least 29% of them invest in UITFs. And these findings actually somehow tie in with our actual experience for our Gen Z and millennial clients. Since the pandemic started, the total number of our Gen Z and millennial clients increased by more than 65%. And the total number of their UITF holdings more than doubled over the same period. So this showed that many young Filipinos today are seeking opportunities to grow their money and diversify their investments.
Would you say then that they are more at least open to making financial investments compared to their older counterparts or the older generation?
Well, based on the results of the study that we gathered, there are increasingly more young Filipinos that are putting investing as one of their top priorities given the pandemic induced disruptions.
Mhm. Now, also, how exactly were you able at Manulife Investments? How successfully or how were you able to navigate the pandemic?
Mm. Okay, one of the advantages of being part of a global organization is the access to global resources. So when the pandemic actually started, we were able to immediately switch to work from home. So that enabled us to protect the well-being of our employees while at the same time staying connected with our clients, our distributors, and our other business partners. And at
Mhm.
the same time, actually, even before the start of the pandemic, we've already invested in digital. So our Manulife iFunds, which is our online investment platform, makes it easy for our clients to manage their investments anytime, anywhere.
Okay, and now what are your targets? Of course, 2021 is coming to a close. How has the year so far been for you when it comes to growth, and what are your targets moving forward to 2022?
One of our strategic priorities for 2021 is to build on our track record of launching differentiated solutions. So this year, we were able to launch five new UITFs, many of which are first in the market. We were also able to expand our number of income paying UITFs that invest offshore, which are accessible to clients either in peso and US dollar share classes. At the same time, we were able to drive the adoption of Manulife iFunds, our online investment platform, which is really an easy, convenient, and secured way of managing one's investments. So for next year, we will launch more differentiated funds to give our clients opportunities to diversify their investments, at the same time enable them to participate in investment themes that are not yet available in the Philippines. At the same time, we will continue to look for opportunities to leverage the digital platform to reach out to more investors.
All right, now, Ira, of course, there are a lot of opportunities, a lot of platforms that Filipinos can take to make that necessary investment. But a number of the population still cautious or worry about investing
Mhm.
here. What should be done to encourage more and more Filipinos to invest?
Well, in my view, educating more and more people about the benefits of investing early and regularly, even in small amounts, will
Mhm.
help drive greater interest in investing, particularly nowadays when more and more people are really working towards achieving their financial goals. And nowadays, reaching out to a broader range of investors has been made easy by technology. So, in the case of Manulife Investment Management, since the onset of the pandemic, we've held a number of public webinars, investment educational videos, and even virtual learning sessions to keep our clients informed of key market developments as well as investment options that they can consider to grow and diversify their investments.
All right. Thank you very much again for your time this afternoon. Ira Gaspar, President and CEO of Manulife Investment Management Philippines. Thank you, Ira. Stay safe.
Thank you, Jess. You too.
And those are the biggest stories this trading day, December 7, 2021. Catch Business World Live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jess De Los Santos. We are One News. Mask on, wash hands, and stay safe, Philippines.